G'day, welcome to the Financial Bloke Podcast, the podcast for people seeking the wisdom needed to grow their family's wealth and live a happier, healthier and more prosperous life. My name's Ben Law and I am the Financial Bloke. G'day everyone and welcome back to the Wealth and Wisdom Podcast. Today we're going to be digging into the extremely interesting topic of insurance. Now I get it. Insurance is absolutely boring by nature, and who would want to invest their precious time getting to know more about insurance? But before you switch off, just bear with me for a couple of minutes so I can pitch you on why you should be listening. If you're a farmer, a grazier, or run a business of any sort, then you need to at least know the basics about general insurance. Why? Well, can you imagine if you didn't have the right insurance in place, or you had some insurance in place but it didn't pay out? If, say, the hay shed, the header, or maybe your house burnt to the ground, a tractor, a work ute, or some other piece of equipment gets stolen. Or even imagine if someone comes onto the farm or into your home and gets hurt and then sues you. You'll never know how valuable insurance policy is until you have to make a claim. And nothing stings more than hearing, "Sorry mate, you have a policy, but you're not covered." If you want to protect your assets, then you need to know what you should be covered for and if your policies will actually play out. The floods that have occurred around Australia over the past decade have shown that far too many insurance companies won't pay out if they can get away with it. Thinking my broker should have all this under control just isn't good enough these days. You need to have a basic understanding so you can quiz them, make sure you're covered, or more importantly, check out whether they know what they're talking about. So to arm you with the right knowledge, we have General Insurance Specialist David Mathieson from Agripro with us. David and I will discuss what you should be covered for, what most people are not covered for and should be, and why insurance companies won't pay out. And finally, we'll give you some specific advice on how you can go about reviewing your cover. So without further delay, welcome David.
Thanks, Ben, for having me. Really appreciate the chat. Thank you.
My pleasure, mate. It should be good. This is a topic that I've wanted to dig in for a while. So let's kick this off. Can you give everyone listening just a bit of a quick summary on your background so we can get an idea of who you are, mate?
Yeah, sure. So country born and bred in Gippsland in Victoria, and I've been working in agriculture and insurance for the past 20 years. And originally started in agriculture when I was in high school and decided to undertake a dairy apprenticeship while completing VCE. After high school, then moved on to working on some larger farms in northern Victoria and some livestock genetics businesses as well. So that's sort of, I guess, where the passion came from with agriculture. And then also went on and studied at Melbourne Uni in ag there as well, but also sort of realised that it was going to be difficult to own my own farm at that point in time, and I guess fell into insurance, and I enjoy working with various farm operations, and that still gives me that enjoyment working in agriculture.
Now, mate, as a financial advisor, one of my professional responsibilities back in the day was to recommend insurance policies to my client, which covered what we called their personal risk. So that covered if they died, they became disabled, or had a significant illness or injury. And it's what we call personal insurance. Now, the other type of insurance out there in the marketplace is general insurance, which is what we're discussing today. So, David, can you kick us off technically on this around what is actually general insurance?
Yeah, so general insurance refers to non-life insurance products separated into commercial and domestic insurance. And general insurance is more about protection from financial loss due to unexpected events such as fire, storm, theft, accidental damage. From a domestic point of view, it's going to be looking at things like motor vehicle insurance, home contents, travel insurance, for example, whereas commercial insurance would include farm insurance policies, business, commercial motor, and liability as well.
And so it's pretty much insuring all things other than the individual person.
Correct. Yes, correct. Yeah, that's right.
So when I was a financial advisor, people used to come to me, David, and they had the following four concerns. Number one is they used to say, well, what should I actually be covered for? I don't know what cover I need. Number two is, well, am I covered? You know, I've got some policies in place. Am I actually covered for that or not? Number three, they go, well, if I've got cover in place, is the premium I'm paying fair and reasonable, or at least value for money? And number four, will my insurance policy actually pay out if I have a claimable event? And there were the 4 areas people used to sort of generally ask. Now, most rural producers that I speak to, they just trust their general insurance broker or their insurance company to have told them what cover they need, etc. And if general insurance is anything like the personal insurance industry, most clients are generally in for a rude awakening when they start looking into what they've got and what they haven't got. Now, if a rural producer comes to you, David, to review their general insurance, what risks do they need to be covering, i.e., what cover options are there out there that they should actually be looking at having in their situation?
It's a really interesting question. I think it really comes down to the individual farm operation. Whether it's beef, poultry, feedlots, cropping, they're all going to have different risk exposures. And also the size of the farm operation will also determine on risk appetite as well. We would see some larger farms being able to self-insure for certain risks and also electing higher excess levels. So I think it's really important that, as insurance advisors or insurance brokers, that it's not an off-the-shelf scenario where this policy is just going to suit every operation or every farm business. We really need to understand what the farm's doing. So, and it's mainly because they'll have different key infrastructure and assets that are vital for the farm to operate. Say for instance, feedlots, they'll have significant capital tied up in livestock and processing mills. Poultry farms, for instance, rely heavily on growing sheds, and cropping, obviously high risk to machinery, and also a lot of capital tied up around crops which can be exposed to fire and hail. So it really depends on the farm and how the farm operates in terms of how we would structure a policy for them. Yeah.
Let's use a feedlot. So what's some of the cover? Let's say someone's operating a mixed operation with the feedlot. They've also got some cropping in there as well, and they're also running some cattle out on the property. Where do you sort of start with something like that, mate? What are the major risks?
Yeah, I think we obviously want to understand what are the biggest risk exposures. And so, being livestock and being cropping, for example, we want to have a look at, how are the livestock insured at the moment? Are they insured? And so there's options around livestock, whether it's a restricted perils policy, which is, say, fire, storm damage, or we can look at going down a more in-depth policy like an all risks mortality insurance policy, which will cover illness, disease, flood. And a lot of the time, financial institutions such as banks would prefer all risk mortality insurance, and we've seen a lot of sort of cheaper finance rates coming through when cattle are actually insured properly also. And then cropping's an interesting one. I think it depends on where the crops are. Are they all in one area? Are they across different aggregations? And so that probably determines, what we do from an insurance perspective with the crop as well.
So how does a policy actually work though? Like you go into your insurance company or your broker and you say, hey, I've got a farm and I need to cover myself. And with life insurance, we would have individual policies. So you'd have like a life insurance policy, a total and permanent disability policy, a trauma policy, and an income protection, and sometimes business expenses. But essentially they were individual policies and they could bundle them up. How does it actually work? Because if I was just running an agribusiness out there and I say, I've got all my general insurance in place, what does it look like? Is it multiple policies? Is it one policy that's got lots of little sections? How does that work, David?
Yeah, so I think, we would spend a lot of time in talking about the farm and what the business is doing there. We'd conduct what they call a needs analysis to understand what, the risks that we need to approach. And it's not always just a farm pack policy that's going to suit the needs there. There will be other insurance programs, whether it's management liability, whether it's cyber insurance, those types of things there that are now something that we're looking at a lot more on, within farm insurance programs. So again, it will depend on the individual farm situation there.
So are they tacked on, mate? So like you get a farm insurance policy and then you say, okay, I need some management liability. Does that just tack on or it becomes an extra policy?
It's usually a separate policy, and it'd be a different insurer as well. So, we find that financial lines insurers, they're going to be completely different to what a farm insurer is. So they're tailored to specifically doing management liability insurance policies. So we would go and use a specialist management liability insurer rather than going back to, say, that same farm insurer that may not even have a management liability policy anyway. So, but it doesn't necessarily mean that, we would still line up the due dates on those policies. You'd still have the same discussion. We just review 3 or 4 programs as part of that renewal discussion, for example, and generally doesn't take up a lot more time as part of that renewal process also.
Well, it's trying to find the right policies that cover you. So your farm manager or your farm policy or your farm pack policy, so it insures your tractor and your header and your machinery sheds and your house and your cars and all those sorts of things. Do you usually list all the individual items under there, David, or it's usually just a farm pack policy with an estimation of total cost?
Yeah, so the farm pack policies, most insurers will print on the schedule actually what's been selected within that policy there. So we will see there it'll be outlined to say that home and contents insurance is covered, and it'll just say yes on there. Theft, yes. Livestock, yes. And business interruption, no. So you have a little bit of a checklist usually around those insurance policies, but also not something that you can rely on either, because when we talk about, say, theft of livestock, for instance, to assume that livestock is insured on the policy doesn't necessarily mean that theft of livestock is actually covered within the livestock section. It can also be picked up under the theft section of the policy, but it depends on the insurer. So it's important to have a chat about that and what your expectations are around cover also.
So you mentioned business interruption, so that may not be covered. What's business interruption insurance?
Yeah, so business interruption covers, I guess, financial loss to the business as a result of, say, loss of property, and it could be infrastructure, could be buildings, it could be a feed mill on a feedlot, for instance, that's caught fire. And so it's all very well to have the feed mill insured that we need to rebuild and reinstate, but what happens during that period, that 6 or 12 or 18 months to rebuild that mill there? So the business interruption insurance usually will cover either gross profits, so loss of revenue to the farm, or also what they call additional increased cost of working as well. So that usually covers the costs that the farm may incur to continue operating at 100%. And we find that can sometimes be better on a lot of pastoral operations. They're not so reliant on hay sheds or anything like that to earn an income. But if a fire went through the property and destroyed pasture, for instance, then there's going to be financial loss for that farm to continue operating at 100% capacity. Whereas a lot of intensive farming operations, whether it's, say, poultry, for instance, they need gross profits insurance because they're reliant on that infrastructure. And if that chicken shed is not there, if it's been destroyed by fire, for instance, then they're not going to receive a batch payment out of that particular shed whilst it's getting rebuilt. So again, it'll come down to the individual farm situation on what we look to structure there as to what their risks are. Yeah.
Okay. So if you've got a grazing operation and, there's the potential that fire could come through and destroy the pastures or the feed stuff, then obviously that would, some sort of business interruption cover would make sense, or at least look into that side of things.
Yeah, most definitely. But it would be about structuring it a little bit differently because, as I said, they don't usually have that key infrastructure like a dairy or a poultry farm may have. So there's other options within that business interruption section within the policy that we can take out instead that can be better suited for, say, pastoral operations, for instance.
But it's knowing that you're not covered for that. That's the big issue, isn't it? It's like you have your farm pack, you think I'm covered, and then all of a sudden something burns down or your crop's all gone because of fire and you think, I must be covered, but you're not. It's knowing to ask those questions, isn't it?
Yeah, exactly right. Yeah.
Now, the other one you mentioned there, mate, was management liability. Do you want to unpack management liability a little bit for me, please?
Yeah, so I think it's, again, one of those things that just because you've got a farm insurance policy, we can't assume that all risks are covered on the farm. So most farms that we would manage now would have management liability insurance, and it's particularly important to cover risk exposures such as employment practices liability, which could be things like unfair dismissal, harassment in the workplace, failure to employ, failure to promote, and also statutory liability risks as well, such as OH&S, EPA fines and penalties. So those are all not considered under a farm insurance policy. They're all liability risks, but separate risks that a business needs to consider. And I guess it's relevant to both companies as well as partnerships. So it's not just limited to, a PTY Ltd company. Partnerships are still exposed to these types of claims. And so generally it's a policy and program that we would put in place as well, particularly if you're employing staff as well. There's a lot of other risks associated with staff. So that's why we would consider management liability insurance.
Okay. Does it cover if someone gets hurt on the property? So, for example, you've got an employee that, I don't know, they fall off a tractor and become paralysed or something like that. Does it cover you under that side as well?
Not so much an employee. only if, say, for instance, there was OH&S final penalty. So if an employee was injured on the farm and OH&S came out and they fined the business for, say, an unsafe workplace, that's where it would pick up those fines or penalties. Whereas the actual injury to the employee would generally be covered under a workers' compensation insurance program. So there's still a component to it, but yeah, different risks to consider there.
Yeah, that must be a fairly big gap, because if you think about OH&S these days, it doesn't take much for something to go wrong and then all of a sudden you're liable. So I would think that would have to be a fairly large gap for most farming operations, wouldn't you?
Yeah, most definitely, and not an expensive policy either. You know, from what we see with sort of large pastoral operations that we manage there, it's a program that is a small cost to the overall farm insurance program. Yeah.
Yeah, and it also covers you as being like director's liability. Does that fall under that as well? So if you're a director of a proprietary limited company, you've got some statutory requirements, and if you breach those, there's fines, etc., even if it's accidentally. Does that fall under that category as well, mate?
Spot on. Yeah, no, still within that same policy there. So if it's been determined, say, as a wrongful act, for instance, as a director of the company, then that would also be assumed under the management liability. But I think it's worth noting, though, that the management liability will not cover any criminal issues. If a court deems it to be criminal from an OH&S or an EPA perspective, it will not pay out. So that's just something to be cautious around, that management liability insurance program.
Yeah, I think that makes perfect sense. So at the moment you've got like a farm pack, and then you've got your business interruption we talked about, and then management liability, which I think to me sounds like a no-brainer for most business. If you've got staff, or at least if you've got staff, that makes sense. Or if you've got any assets, that if an asset gets lost, destroyed, or something, an insurable event happens and your business can't operate, that's going to be an impact. But the other one you mentioned earlier too, I want to go back to, is cyber insurance. Now, that's something that I took out of personally a few years ago when I started to get really nervous around cyber, and, back when I was a financial advisor holding data of clients. And my not last episode, the one before went out, we actually did one on cyber insurance to make sure. So if you're listening and you haven't listened to that podcast, go back and have a listen. Cyber risks are huge at the moment. You need to make sure you've got yourself right. But what does cyber insurance involve, David?
So I guess initially, just probably a step back around cyber there, is to, a lot of farms would think, well, we don't sell anything online, we're not exposed to any cyber issues, but it's actually not really what the insurance program is designed for. And we've seen recent large cyber losses for AGCO, for instance, JBS, Australian Wool and Auction, where they've been all impacted by ransomware cyber events. That ransomware is where software has been maliciously put onto a computer, and then they're held at ransom to pay a ransom, obviously, for then that data to be released or that computer to be accessible for them again. So I think what we're seeing is that a lot of farms now are managing and storing significant amounts of data, whether it's soil, water, crop, animal health, and they're all connected to the internet. And so, another misconception around the risk of cyber is that, well, we store everything in the cloud, we don't have a risk because we're not storing anything on our computer. But that's also not the case as well, because, even with data being stored in the cloud, there's still risk of loss via hacking, ransomware that will cause, loss to the farm. And I'd also say that most farms would be using emails, payment management systems, invoicing to pay suppliers, etc., which all have, a risk to cyber also. And a common example that we would see is what they call social engineering. So social engineering would be where a farm has received an invoice from, let's just say, fertilizer or a livestock supplier, and they've been asked to pay the invoice. And what can happen on a social engineering claim is that a third party can, hack that document and change the bank details on that document there. And so what's happening then is the farm is actually paying into a fraudulent account there. And that money then disappears. And so cyber insurance picks up things like social engineering. So even though farm, they're not selling online, but a lot of payments now, a lot of emails are all being done online. And so that's, I guess, where we're seeing those cyber exposures for farms also. So could be things like hacking, malware, social engineering, those sorts of losses, and including business interruption, restoration of data costs as well, all considered under a cyber insurance program. And I think we're going to see a lot more of it, as more automation comes in with machinery, and there's going to be much more collection of data on farms. And I think farms are really being seen to be an easy target at the moment with hackers. So it's something that we're certainly discussing with our customers as well.
Yeah, it makes perfect sense, mate. I mean, I've had a conversation with at least half a dozen people over the last 6 to 12 months that have had some sort of cyber problem, and the invoice hacking has been the number one. There was a story of a friend that was somewhere around $200,000 they lost. And what people don't understand, and we talked about this back in that last episode, was that you might be hacked or the person you're interacting with might be hacked. And it's like, well, who's at fault? Who pays, who doesn't pay. If you've paid an invoice and said, we paid your invoice for $50,000 for fertilizer, and they say, we never got it, who's liable? And then it ends up in court, etc. So it's a whole messy scenario. And for me, I think if you're running a business, cyber is a really big problem. It's something you need to be really cut. And so if you don't have a cyber insurance policy, you're probably leaving a very big gap in your business, because there's also the whole fact of, imagine the downtime. Like if you're running a genetics business, so you've got all your pedigrees and your genetics, all your data you've collected. If you're you're doing carbon projects, where you've got, I can't imagine the historical data that could just be lost very, very easily if this is not, protected. And then the downside business wise from an insurance point of view. And
I think in terms of those financial losses, it can't always be assumed that the bank's going to cover you. There's always this misconception that, if there's a fraudulent activity with banks, etc., the banks will get involved and recover those funds. And that's not the case. The money ends up overseas very quickly, and it can't be recovered. So, just something to I guess keep an eye out for. Yeah.
Today's episode is brought to you by Agripro. You've worked bloody hard over the years and you've built a solid operation. But as your children grow up and start their own journeys, you're beginning to think about the next 5, 10, and even 15 years and how to keep driving the business forward and ensure a smooth and successful succession plan. Preparing the business, preparing the next generation, and preparing for your eventual retirement all requires a solid plan and a proven process. Unsure about the right steps to take? Head on over to agricoach.com.au/webinar to learn more about our Succession Proof Your Family webinar. Agricoach, aligning families, growing wealth, and protecting legacies. And now, let's get back to the episode. Now, mate, we had, just the farm pack insurance, cyber insurance, business interruption insurance, and management liability. What else is there, mate, in general terms?
Look, I think it's probably more so spending time on those insurance programs and making sure that they're set up for the business. Things like insured entities are important under a policy.
What does that mean, mate? Insured entities?
Yeah, so we're talking about the companies that are listed on the insurance policy. And so whether it's the company or whether it's the partnership there. So I think farms have become more complex in company structures, and particularly with different divisions. There might be the one division or a proprietary limited division that owns all the machinery. The super fund owns the land. So they become a little bit more complex to, I guess, insure. And so if say for instance, the super fund is not listed on that farm insurance policy and they're the owners of the farm property, well, there's actually no liability insurance for the super fund as the property owners of that farm there. So I guess it's probably one of the first key points that I would always run through with farms is tell us about the company structure. How's it set up? How does it operate? Because we do see policies that come to us and it's missing entities on the policy, which, if there is a claim, creates quite an issue there. So I think that's one point. And I think liability in particular needs to be really robust for a farm in terms of how it's set up and structured. I think that liability is seen, I guess, as a low frequency.
Sorry, David. Sorry to interrupt, mate. Liability, can you just give us a definition of what you mean by liability?
Yeah, so public and products liability. So public and products liability, so personal injury or property damage as a result of the farm business operation.
So that's like a bull gets out on the main highway and a car hits it, someone comes on the farm and falls over, a piece of machinery runs over someone that they shouldn't have.
Great example. Yep. No, that's perfect. Yeah. So when we talk about that liability risk there's a lot of considerations that we need to think about. And so, whilst it's, as I said, a low frequency but high severity risk, meaning that we don't expect to have a claim in, 12 months, 2 years. It's more so what the claim cost could be if there is a claim. And so that's why it's important that liability insurance program. And a lot of the time it's just ran through quickly and just, we've got public and products liability in our farm insurance policy.
We've got $20 million worth of cover.
Yeah.
Let's move on.
Yeah, exactly. There's a lot more to consider within that program there. Things like, is the farm doing any contracting work? Are they doing any aerial spraying? You might think, well, we don't need cover for aerial spraying. The contractor has got their own cover, but there's a vicarious risk in terms of the farm could still be dragged into a claim if there's an issue with, say, a neighbour's vineyard that's been sprayed or et cetera during that spraying. Cotton spraying, some insurers will limit, I guess, cotton spraying activities. So it's worth just checking if the farm's doing any cotton spraying. Aircraft landing strips is another one. So has the farm got aircraft landing strips? There's liability associated with that also. Payments to contractors, subcontractors, labour hire. Labour hire is I guess, a big one at the moment. We see a lot of market gardens, I guess, vegetable farms, fruit operations that pay a lot of labour hire companies. And when we spoke about those workers' compensation claims, those farms are really exposed to workers' compensation claims from the labour hire companies. So the labour hire companies would have their own workers' compensation for staff, but what happens is if they got hurt or got injured on your farm, it allows workers' comp to actually recover those costs. And those costs would be potentially a claim under your farm liability insurance program. But if you're not disclosing that you're paying labour hire, the insurer won't pay for those types of claims there. So there's a lot of more sort of consideration around, what the farm's doing. Goods that are processed, exported overseas into US, Canada, those sorts of places there generally have exclusions in farm policies. So, we might need to then structure a different liability insurance program, which we can do separate to the farm as well. So I think it's one of those ones that gets ticked off very quickly, but there's a lot more to consider in there as well.
Yeah, that really highlights for me, David. Again, going back to the personal insurance side, what I used to say to people is you want to know all the risks that you possibly might be exposed to, and then you want to let the insurance company know to get certainty around what you are covered for and what you're not covered for. You don't want to assume. Prime example for that back in the day was if you climbed windmills. That was a major risk. You're above 4 or 5 meters up in the air. A lot of insurance policies would have, if you fall off something that's over 4 meters in the air, you're not covered. If you go up in a helicopter, mustering, you jump in you're not a helicopter pilot, but you jump in the helicopter to, run around the paddock just to see where the cattle off. Your helicopter pilot drops you off. Well, are you covered for that if that happens to crash, etc.? So there's all those sorts of things. I'm guessing it's the same in general insurance. And for me, when I did personal insurance, what I'd see, David, is people would come in and in almost 100% of cases, you'd look at their policies and go, you've got significant gaps here. And the two areas that these gaps came in from was, one was the client's knowledge. They didn't know what they needed. We've got life insurance. Well, what happens if you become disabled? What are your family going to do if you're in a wheelchair, quadriplegic versus dead? Dead's bad for you, obviously, and the family, but disabled's possibly financially worse. So are you covered for disability? They're like, no, Ben, I don't know about that. And I'm guessing it's the same with general insurance, unless the people know. The second side, or the second reason there was big holes, was because they just not do the job properly. So they get someone to half-ass the job, wouldn't give the right amount of time, or they get a shitty insurance broker to do the job, and they just tick and flick and off they go. Then when you'd sit down with them and go through it methodically and say, hey, I know this is a boring job, you probably don't want to do this, but we just want to make sure, and we go through with a fine-tooth comb. That's essentially what you're talking about now, isn't it?
Yeah, exactly right. Yeah, and I think it's, comes down to, what are some of the reasons why a policy is not going to pay out, and we need to consider those and make sure that they're, ticked off in the insurance program.
Yeah, which we'll come to that in a little bit of time. But what I also want to say, mate, is what I see is a big gap in the industry, and this is not a plug for brokers or anything like that. It's just basically saying if you go to an insurance company direct and you say pick company A and you say, am I covered? They're only going to tell you about the policies that they have and the cover that they provide. They're not going to say, oh, okay, sorry, we don't cover in this area. We're going to recommend another company for that part of the policy. Whereas if you go to a broker, their job is to work for you, not the insurance company, and say, well, here are all the risks. Which of the companies should we use? Company A will cover you for this bit, but they won't cover a risk over here. So we'll get company B in and then match them all together to give you the best outcome.
Yeah, and I think that's really important as well. Like we would have a pretty good understanding based on what the farm is doing on where or who the best insurer is to place that farm with. And same with management liability, cyber, for instance. So we know that there's certain insurers that are going to be better at doing those farm risks than others. But we would also provide generally, a full report to our farms on what are the markets we've approached, what's the outcome on those, and why have we chosen to go with that selected insurer. And it's not always going to be about cost. It'll be quite detailed into that it might be a specific reason because they might cover this, but the other insurers don't. So yeah, as I said, it's not always going to be about cost, but we'll put that in front of them and I guess show that we've gone to the market, we've explored options, and this is what our recommended program is.
Yeah, and the reality is all insurance costs money, and sometimes, as you mentioned right at the beginning, was something called self-insurance, which is there's a risk there, but you're saying, okay, well, if that happens, I'll take the financial consequences on the chin and I'll pay that. So i.e., my farm ute's worth $5,000, it's going to cost me $1,000 to insure. Oh, well, if it gets stolen, I'll cover the $5,000. But I might have some, liability insurance on that just in case we have an accident, etc. So you say, I'll take that on. So, mate, when people come to you, like for me, I used to see, as soon as someone would walk in the door, I'd see some common problems, straight up that you just go, oh yeah, everyone's got this problem. They've got this gap. For you, when someone comes in to see you, what's the biggest gaps you normally see on average that people may not know about?
Look, this might sound fairly obvious, but actually no cover. And I know this sounds silly, but, we'd see a lot of policies that would come in and there is no cover for fencing. There is no cover for livestock. And that might be consciously selected that the farm doesn't see that to be a risk. But an insurance company is not going to pay out if there's no cover in the policy. So it's about going through all of those individual items and checking off and just make sure that the farm understands that if something was to happen to livestock or something was to happen to fencing, it's not covered and the farm has got adequate cash flow to cover that type of loss. And so I guess that's the discussion that we would have first and foremost.
Yeah, I think that makes perfect sense, mate. And again, that's why it becomes really important if you are going to get some professional advice on this is have someone that specialises in agriculture and deals in your industry so they know. And number two, that has a lot of miles on the tyres. I know as a financial advisor, I did it for over 20 years. And after 10 or 15 years, you haven't seen everything, but you've pretty much seen most things. So you can pick up stuff really quickly, really efficiently, and really accurately, which is really important. So, mate, one of the experiences I found, David, in insurance was, against the grain, but most insurance policies wanted to pay out. That the insurance company said, we want to pay out claims when it's legitimate, but sometimes they just wouldn't. And there was usually legitimate reasons for that. So in your case, why wouldn't an insurance policy pay out other than the obvious, which is, that thing is not insured?
Yeah. Non-disclosure is certainly probably one of the key items there. And it might just be accidental that it hasn't been thought about.
So what does non-disclosure mean?
So meaning that the farm hasn't disclosed something that's relevant to the risk in terms of underwriting the risk or insuring the risk. And so that can have an impact because it will void an insurance contract and will void the insurer's responsibility to pay out a claim. So it's really important that we consider that non-disclosure anytime we're, endorsing the policy, renewing the policy, that if there's any changes there, then, we need to know about that as insurance brokers so we can convey that to insurers as well. So a common one that we would see would be unoccupied homes. And so a lot of farms are going to have this second, third, fourth home on the property there that workers, and whether it's seasonally occupied, those homes there. And so they create an issue around non-disclosure, because if we don't advise the insurer that house is unoccupied, usually, there's policy limits and they will vary. So it's worth checking with your insurer or with your broker there. But the cover dramatically reduces on an unoccupied home unless it has been agreed by the insurance company. And so even if it's just got workers in there for harvest or something like that for a few months of the year, need to have that conversation, because it's a disaster waiting to happen if, say, a fire was to break out into that house there. So that's probably one example of non-disclosure. External activities, farm contracting, so incidental contracting if you're doing the neighbour's property or some other farms as well. Every insurer will treat farm contracting differently. So it's worth checking again with the broker around what is the allowance for us to do the neighbour's property, or, a few farms to just earn a little bit of income on the side there. Generally, it's okay, but there's a limit there around income or percentage income, and each insurer is different. So worth checking on that. And payments to contractors, labour hire companies, which we spoke about earlier, they all relate to the farm's liability program. And we want to make sure if there is one of those, higher severity type losses like a liability claim, then there's no issues around, disclosure around the liability program there as well.
It's interesting, I look at this and I go, if you're running a successful business, you need to allocate a certain amount of time a year to do this properly, and you should. If a car gets stolen or a motorbike or a buggy gets stolen, it costs you $5,000, $10,000, $20,000, $30,000. That's a hole in the cash flow. I get that. It's a lot of money, but it's not going to send you broke. But this liability, if something happens, like, again, I'll use that bull gets out on the road and kills someone when they run into it, or you do some contracting on the neighbour's place and something goes wrong, etc., could be catastrophic to the family's financial position. And so for me, I go, okay, well, this is although it is a low probability, as you mentioned earlier, it's a high financial impact on the family, like massive. And you could be tied up in the courts for years. And the thing is lawyers are actively out there looking for these no-win, no-fee cases. Yeah. And so if they see, hey, we've got this farmer, they've got a farm, they're asset rich, even though they might not be cash flow rich, they're asset rich, and they go, wow, this is a great target, and off they go. And generally in this day and age, we're getting more and more litigious. So I'd be suggesting to most people that if you're running a good business, you need to get out, you need to spend a certain amount of time a year to actually go through and review this. Can you just tell me the process you'd follow with people, or a broker, should follow if they come in and see you, they bring their policies in? How much time would you usually say it would take for them to sort of download all the information to you for an average size operation to start with?
Look, we usually would be a couple of hours to go through the program with them. Obviously, we want to get a really good understanding as to what the business is doing, but then go into a lot more depth on all of the particular sections. And it can be seen as, as a little bit tedious, but that involves going through all the machinery as well. And so some farms will have 100 items of machinery, for instance, and it can be a tedious process, but it's important going through them. So, I think probably around sort of 2 hours on average as an initial review. And then us as brokers would then spend, significant more amount of time to go and get quotes in the market with various insurers. So there's quite a bit of work there. And also from a renewal perspective, we would usually send a pre-renewal out to customers just to say, hey, look, we're working on your insurance. We're going to be in contact shortly. And then we'd spend probably, another hour and a half at renewal just talking to the customers about their insurance program, what has changed in the last 12 months as well with the farm business, and also just a bit of an update on the insurance market as well. I think it's important that people understand what's going on in the insurance market, what risks are, on the horizon that we should need to start considering that may not be covered as well. So, yeah, and I know every farm sees it as such a tedious process and a pain, and no one enjoys doing insurance. But I guess it's one piece of advice there that I would say is spend the time on it, because when a claim does occur, you'll be thankful that you've spent that another half an hour or that another hour on just, ticking all the boxes and making sure that you're comfortable with the insurance program, everything's been disclosed, and also comfortable with the insurer that you've been recommended as well.
Yeah, it's funny. I used to say to people, David, that you invest a little bit of time up front to get it right, and that gives you more confidence, clarity and certainty. So you're sort of clear that you've got cover, you feel confident you've got cover, and then you've got certainty that if something goes wrong, you're sorted and you know what's going to go on, and you sleep well at night. And then just like anything, if you're a good business owner, once a year you should sit down with your people and go, let's go and do this, do it properly, and then we can just move on. There's nothing worse than that niggling feeling of, am I covered, am I not covered, especially when you've got a complex situation with multiple entities. No, that's great. And so I was going to say, is there any piece of advice you want to give before we start to wind this up? But is that your piece of advice, or have you got anything more?
Yeah, no, that's definitely my piece of advice. Spend time on your insurance. As I said, I know it's tedious, but there are brokers out there, that want to spend time and put in the work for you to make sure you've got adequate protection. So, engage them in the process of what you're doing on the farm there. I think that's really important.
Yeah, and find someone you trust. That's the number one secret, I think, from my point of view. So find someone with the experience and knowledge and that actually cares about you, and invest that time. I think that's great. Well, we're starting to run out of time now here, David. So give us a bit of a spiel on your business is Agripro. So can you give us a little bit of a spiel on the business and, where people can find more about you online?
Yeah, so Agripro, obviously, as the name suggests, we're specialised farm insurance brokers or, agri processing facilities that we look after. So anything agri-based, we're involved with there. So usually larger farm operations that we deal in. So you can find us, I guess, on our website, which is agripro.com.au. There's a list of articles, resources on there around different farm risks, etc., that people can access. We're on social media, Instagram, Facebook, and I'm on LinkedIn also. So, if anyone wants to reach out and say hello, feel free to do so.
Fantastic. Excellent, David. Now, mate, last question I like to ask before we head off, and I've given you a little bit of notice, so this one's coming, but I like to always get an understanding, because as we mature and we get older, we look back and we go, I wish when I was 15, when I was 20, when I was 30, I knew this. What's the piece of advice, if you could jump in your time machine right now, go back to, say, when you were 25 years of age, what's the one piece of advice you give yourself?
Yeah, this is a tricky question. I wasn't looking forward to this one, Ben. Thanks. I think it would be, back yourself on decisions. I know that sounds silly, but I think it's, there's always going to be an element of risk in what you're doing, whether it's, us as a business or at home, or whether you're buying the neighbour's farm or, considering crop rotations, all have an element of risk. And I think the second one, I know you only asked for one, but I think it's important, to surround yourself with people that share your vision and passion, not only staff within the business, but suppliers, whether it's farm consultants, bank managers, accountants, insurance brokers. They're all there to help minimise risk and enable growth, within your business there. And, if we can play a small part in that as insurance brokers, that's the highlight of what I do. So 2 items, back yourself, surround yourself with people that share your vision and passion. And I think that's probably, if I could go back to when I was 25, that would be fantastic. And maybe have a think about doing something about the lack of hair now.
I'm not sure you could have fixed that, David.
No, I know. It's okay. I've come to terms with it.
Awesome. Well, that's great, mate. And look, my advice to 25-year-old Ben is back yourself as well. It seems to be a common theme for people looking back is they wish they'd taken action. Something I just want to end us up on, David, is a wise man told me a number of years ago. He said to me, Ben, the secret to success in the future is who, not how. To be successful, you don't know how to do everything. You just need to find the right who's. And what he meant by that was you need to find the right people to help you do the things you need to do. And I think when it comes to insurance, it's exactly the same. You don't need to know everything. You just need to find that right person that does and, bring them into your team, lock them in, and then work with them. Don't just lock them in and deal with them and then just be flippant. You got to work with these right people, but who, not how, is the secret to success in anything in life.
Yeah, exactly. Yep. I agree.
All right, David, I'll put your details in the show notes. That's been fantastic. Just from my point of view, I really appreciate you coming on board. We do need to be really careful that everything we've said today is just general in nature. It's not specific advice. So before you act on anything you've heard, make sure you go away and get personal advice or specific advice for your particular circumstances. This is just an education process. So thanks very much, Dave. Super appreciate it. And yeah, anyone that's got any questions can reach out.
Yeah, perfect. Thanks, Ben. Thanks for having me.
So insurance. It's a boring topic, but it's essential in business, as I mentioned multiple times during that podcast episode. But hopefully that's given you enough information to be able to go, gee, I really need to go check out my insurance to make sure it's all in place. Now, I just want to do a couple of points that I thought were really important just to go back and reinforce those before you go. Number one is management liability. That's around the OH&S. If something goes wrong on the farm with people, that there's some sort of liability there, you need to make sure you're covered from that, especially if you're employing anyone. Number two, cyber insurance. You might not think it's a big problem, but you need to make sure you're covered for that. So check with your broker about that. The next one was business interruption. So making sure you've got your business interruption. So for example, if your feed mill burns down on your feedlot, that means that you can get the feed mill replaced, but what about all the income you've lost while the feed mill's not in production, or you've lost your header's burnt to the ground and you're not able to harvest your crop? Making sure you're covered for all of those. The other thing that Dave mentioned in there, which I thought was really important, was number one was insured entities. So for most farming businesses I see now, they have multiple entities. So that's companies, trusts, etc. Assets are held in different entities. There's different entities to the trading entity, to the asset ownership entity, and it's all complicated, tied in together. You need to make sure all entities are noted on the policies, or at least have your broker review that. And the last one was liability cover. Is just because you've got, say, $20 million worth of liability doesn't mean that you're covered. You need to make sure that all the activities you're involved in, if you're doing off-farm income, so you're taking a tractor off farm and ploughing the neighbour's field, or you're doing some contract mustering or contract harvesting, you're moving cattle around between operations, you need to make sure that liability cover has been done appropriately as well. And just making sure those reasons that, as Dave mentioned, houses that are empty on a property, that can be a really big thing that you should have noted and checked. And that could be multiple houses that you move between, that you're spending some time in and less in others. You really should make sure you get that checked by your broker. But overall, my advice to you is to see a broker. Don't just go to an insurance company and ask them, are you covered? See a broker that's appropriately qualified and specialised in ag. And just one thing before we head off, I just want to reinforce the whole disclaimer thing, which this is general information. Get advice for your specific circumstances and don't act on what you heard today without specific advice from an appropriately qualified person. I just want to really hammer that home. It's really, really important. So that's it for today. A great thank you. If you want to say thanks, is share the podcast, The Wealth and Wisdom, with as many people as you possibly can, which has been happening. We're getting anywhere from sort of 6,000 to 8,500 people every month downloading, which is absolutely amazing. So I just want to say thank you to everyone. And that's it for this week. I'll see you in 2 weeks' time.